You too. What's going on? Appreciate y'all watching my videos. This light. This light, something else. Get it. What's going on? I want to wait for a couple of people to come in and make sure the stream good. Hey, y'all let me know if the stream good. Y'all can hear me. I got that AC blowing good back there. I wanted to talk to y'all about some stuff. I'm in Atlanta, man. I'm in Atlanta. That's where I'm at. I ain't been doing nothing, man. I just been running the South. I ain't been going nowhere. You know. I mean, you know, a lot of guys been talking about, oh, they not making no money and the rates are down. Yeah, the rates are down. Freight is not plentiful like it was, but you can still make it out here. You know, you won't do 6,000-7,000 a week, but I mean, I'm still doing about 4,500 to 5,500 a week. Yeah. I use my experience from Snyder and Travel Loco, and I come out here and make it all on my own. So I've been talking to guys with their own authority. Get it. Yeah, get it. It's a guy over here. He just got loaded. He just he trying to move his tandems. You know, when you're trying to move your tandems, you put the truck in gear, try to yank them tandems loose to slide your tandems. He yanking the hell out them tandems, boy. Javon say, I'm picking up a load in Charlotte. You going to Nevada? What kind of rate you got on that load? Nevada? That load better be paying $5,000. It better be paying. Man, you better get out of Charlotte. Javon, what that load paying, man? I have a chance to get D Major say I got a chance to get a truck. 2015 Pete, 400,000 miles on it. You gotta check the Blue Book. You gotta check what's that equipment evaluator thing? It's a website. It's not Blue Book, but it's the Kelly Blue Book for commercial equipment. I think it's NADA or something. NADA. You gotta check NADA. Check NADA. You might have to pay for it. Just use your common sense, man. Don't get in a hurry. Use your common sense. Slow down. Check the truck out. Take it to a mechanic. Pay him $100. Let him look at the truck. Get the dyno done. If you can, get the dyno done. Look over the truck the best you can. Pre-trip the truck. See if you can get all the records. Call PACCAR. I suggest you call PACCAR. Get the VIN number. Call PACCAR and or Peterbilt and ask them, do they have any 2800? Yeah, man. I just had my DPF filters replaced. I know. It's all good. It's business. We making money. It's all right. I'm not happy to spend the money, but I feel good that I got the money to spend on that, you know. So Yeah, call PACCAR, give them that VIN number, and ask them all the questions you can think of about that truck. It don't matter if it's in warranty. 400,000 miles, it may still have a warranty on it. Call PACCAR and see if you can get all the data on that truck. All the claims on that truck, all the yeah, I don't know what happened. YouTube crashed. But yeah, let's see. D Major say getting it from the Peterbilt dealership. One that has all the maintenance records. That's okay. Check out NADA. Check that website out. There's some other websites that you can evaluate equipment value. Do some comps. Go on truck paper. Go on truck paper. Go on different websites that sell trucks, and just use your own common sense and evaluate the different trucks across the marketplace, and make sure that you getting good market value for that truck. If they want 50,000, how many miles on it? Let me see. You said it got 400,000 miles on it. Okay. Everybody want to call. Stop calling me. Damn. All right. So the truck got 400,000 miles on it. It's a 2015. You want to look in the market and go on truck paper, and you want to see other trucks with similar specs for the same price generally. So that way you can negotiate. See, you want to have information to negotiate. So if they want 50,000, if you can go on truck paper and find a truck with similar specs and say, hey, I know y'all want 50,000, but there's 4 or 5 other dealers that's selling the same exact truck, same color, same specs, 13 speed, everything for 45. Can y'all meet me in the middle? I'll do it for 47. You know what I mean? So get all the maintenance records on it. I mean, because you need information to negotiate, and that's what we get into here. You don't want to go in there blind and just be like, you don't know what to negotiate. You need information to bring down that price. You need some reason to bring down that price. So, you know how to pre-trip a truck, man. Take it for a test drive. If you can, ask them to see if you can hook it up to a trailer. See how it pulls a trailer. If they got a trailer on the yard, see if they'll let you put a trailer on it. I know a lot of dealerships, they probably won't let you do that, but ask the sales guy. If he really want to do that deal, ask him to let you pull a trailer and round the block and see how the truck pulls a trailer. Don't get in a hurry with the truck, man. Just take your time, use your common sense, do your due diligence, and you know, I'm getting it from the people. Okay, yeah. So but this video is not about buying a truck. This video is about the 2018 tax bill. Okay. The 2018 tax bill. $2018 tax bill. Scott, what's going on, man? $2018 tax bill. Okay. There's been a lot of changes to the tax code. A lot of changes to the tax code. But you know, I was watching some videos about Donald Trump, and when he passed that bill, he pretty much holding the truck drivers down. I appreciate Donald Trump. I really don't like Donald Trump, but it seems like Donald Trump is looking out for the truck drivers. That's, you know, because he made a special announcement talking about truck drivers and what he's doing to help truck drivers. I mean, there's a lot of things he could do. I mean, if anything, I would say, hey, President, Mr. President, can you address the parking issue we got out here? Now, that's not a federal issue. However, you know, the president can give the states funding to help us with parking out here. We got this heavy ELD mandate that then came down. It's very hard to find parking out here. And every time I turn around, you got states closing rest areas. Like, I don't understand. Like, why are they closing rest areas? We need rest areas. You know, like, it is. I mean, I just need a place to park. I don't need a full-fledged bathroom and all that. Just give me an empty lot with some lights and stuff, so I can just pull over and park, take my break, and go on down the road. But you know, I don't know what's going on. So the president made some requests, and he put out statements talking about truck drivers. He's supporting the truck drivers and whatnot. And I really appreciate that. So 50 people calling me like, man, stop this. I'm trying to make a video. So I lost my train of thought. I'm sorry, y'all. I lost my train of thought. So we talking about this tax bill. They made a lot of changes to the tax bill, and truck drivers who own their own truck and trailers, we're not really affected that much, if that at all. If anything, the tax bill may help us. I got a few tax videos, you know, I got a few other tax videos a while back when I was talking about, you know, starting a business and all this stuff. And this tax bill is pretty much motivating you and telling you to go get a business, start a business of some kind. So if you're not a truck driver and you got a traditional business, you know, you're a real estate agent, you're a doctor, you're a corporate professional, you're a CPA, you got a small business, brick and mortar business, you provide services to the public or something like that. The tax bill, it's taking a real big hit to a lot of people. So let's talk about a few things that I was reading through different articles and stuff like that. I know I'm a little late when it comes to this tax bill, but I've been meaning to make a video about this. So I thought, you know what, let me go ahead and make a video about this. I know a lot of guys on YouTube done made a tax reform video. I'm late. I'm late. It's September. I'm just now making my own opinion on what this tax bill means. For us truck drivers, it don't really change much. It don't really change much. Company drivers are taking a big hit. Company drivers, I don't know. But I mean, if you're a company driver, W-2 truck driver, to tell you the truth, you really have no business taking out-of-pocket deductions anyway. Because if you're a company driver and you're buying gloves, safety vests and stuff like that, you don't need to be buying that stuff anyway. Your company should be supplying that stuff. Most companies that I work for supply you when I worked at JB Hunt, I got boots. See these boots right here? These are the same boots I got from JB Hunt. These are $100 boots. They're free when I was working at JB Hunt. These are free boots. They give them to you for free. I got like 3 packs of safety vests. When I worked at JB Hunt, gloves are free, safety vests, boots, uniforms, you know, you get free shirts, free pants and stuff like that. So a lot of that stuff, the company should be paying for it. So if you're a W-2 driver, you have really no business taking deductions other than the per diem. Now the per diem in the new tax bill, it basically, it looks like to me, you cannot, they pretty much on the schedule A, the 2106 form, they pretty much remove everything off of there for a W-2 driver. And they pretty much move that to the corporate side. So if you have a corporation, you know, S Corp, C Corp, something like that, and you're a W-2 employee, you won't be able to take advantage of those deductions unless you're a partner at the firm. Which W-2 people, if you in trucking or you're an attorney, you work at a corporate company somewhere, if you're not a partner, you won't be able to take advantage of those deductions. You have no business taking advantage of those deductions anyway. But there is a gray area, and the gray area are like industries like real estate. If you're in real estate, or if you do door-to-door sales or something like that, those guys are going to get hit hard because these guys are like in that gray area of the tax code. And what I'm talking about is like, okay, these guys who do door-to-door sales, but they get a W-2 paycheck, they do commission-based type work. Some insurance agents where they have to go out and sit down with a customer, life insurance people who do, like, they have to sit down with a client and they have to spend money on gas. They can't take those deductions anymore. But what they did was they raised the standard deduction to $12,000. So it's kind of like a wash if you think about it. However, if you used to have deductions like in that $15,000 range, if you're a W-2 person and you used to itemize, you can't take that mortgage interest deduction. You can't take you can't itemize no more. However, they increased the standard deduction. So it's kind of like if the standard deduction is $6,000 for a single person, well, you still got $6,000 that you can deduct. So, but since they raised the standard deduction to 12, but then took away all all the itemized deductions away, you know, the employee reimbursements, all that stuff like that. It's kind of, if I mean, like I say, I've been doing my taxes since I was 18. Since my first job, I've been doing my own taxes. So if you look at the Schedule A and you look at the 1040 and you start going through the 1040, it's kind of deductions. They just shift them papers around. And basically, I think what Trump did is that he put those deductions on the corporate side. So if you have a schedule, if you got a S Corp or something like that, they pretty much put those deductions above the line. It's forcing the companies to take those deductions rather than giving the employee reimbursed expenses and having them take it on their 1040. That's what it seems like to me. So unless you're an owner of a company, you won't be able to take those deductions anymore. You shouldn't. You have no business taking those deductions anyway. And it just seems like they just pretty much simplify the tax code to me. You know, the everyday, I mean, the tax code is thousands of pages. The tax code is thousands of pages. However, the everyday taxes that the everyday person uses, you know, the Schedule A, Schedule C, the Schedule E deductions, and you got passive income, you know, income from dividends and stocks and real estate and stuff like that. Those are everyday tax advantages that the average Joe. I'm just checking the light because, you know, I'm waiting for them to get me loaded here. So like I was saying, Trump and his administration, they just pretty much did like they just revamped the damn tax code. But I think they just simplified it a little bit. That's what I think they did. But for those people who are in that gray area, I don't know. There's a lot of people in that gray area. You know, you got real estate agents that's in that gray area. You know, they won't be able to write off gas, and they won't be able to write off certain types of expenses. On the corporate side, from what I've been seeing, they're not allowing companies to take deductions. Meals have been cut back to 50%. It's no longer 100% write-off anymore. So like if you're having a business meeting at a restaurant, you're having a business meeting at Six Flags, or you're going to a spa for a business meeting, you won't be able to write that off 100%. It's now a 50% write-off, which, you know, if you was to look at, okay, for example, if you make $100,000 a year, right, and you got $25,000 in deductions, in 2017, that would have been $25,000 in deductions. However, in 2018, it's going to be $12,500 in deductions. If you got a whole bunch of meals and stuff like that, $12,000 worth of meals and stuff like that. It's just, instead of 100% deduction, they kind of pulled it back to 50% deduction. However, they're giving companies additional 20% deduction. So if you look at it, it's kind of a wash, you know, it's because they're taking the money away and giving it back to you. It's just a wash. And what I think they're doing is they're trying to motivate small business. That's what they're trying to do. They're trying to motivate people to get into small business. So at this point, if you're a W-2 person, I suggest you just creating a side hustle to take advantage of that 20% deduction. There is a additional 20% deduction for those who have businesses. So if you're a W-2 truck driver, I suggest you creating a dummy side hustle just for tax purposes. You know, get you an LLC, or you can do sole proprietor. It don't matter. Just go and get you an EIN, or, I mean, you really don't have to get an EIN. I mean, you can elect to file under your social security number. You know, you can elect to do that. But the point is to be able to take advantage, or is the point is to use your that dummy business hedge fund, or as a hedge against the taxes. Like I've been telling y'all, I made a bunch of videos about this way back when I was at Snyder, and I told y'all, you need to start a business. The tax code is in your benefit when you have a business. When you have a business, you can take advantage of all these tax advantages, and you get to put it above the line. Now you get to take above the line tax deductions. And when I say above the line, when you have a business, you have gross income for a business. So when you look at the income for a business, you got your income statement, right? As a business owner, your business is on your income statement, and then you have your personal income on your income statement. So your business is at the top, You have gross income. Now, if a P&L, not necessarily a P&L, but it's an income statement. P&L is just an income statement for a business. But I'm talking about an income statement, a personal income statement as a business owner. So as a business owner, your income statement will be everything because I'm the owner of the business. So that includes my business. That includes all my personal stuff. So if you're looking at an income statement, you just draw a line across the page. Your business is on the top. Now you get to put all your personal deductions or all your personal expenses above the line. That's what, when I say above the line expenses, now you get to take those above the line, you get to take those regular everyday expenses, groceries, cell phone, all that stuff, and put it above the line. Now it's a business deduction, which lowers your tax liability. Now you get to keep more of your money. That's the point. So that's what I mean above the line expenses. So now your cell phone is a business expense. Insurance is a business expense. Your computer is a business expense. So you put that above the line. So you just draw a line across the page. So you just look at your personal expenses and decide, trying to figure out, okay, what things can I put, what items that's below the line that I can put above the line to make it a tax deduction for my business. So it'll lower my tax burden. Instead of paying for stuff after tax, I get to pay for stuff before I get taxed on it. That's the whole point. But anyway, we got 27 minutes into the video. I ain't even really talk about my truck drivers. I gotta talk to my truck drivers. But I have to talk about that first before we even talk about the stuff for truck drivers. So right, for business. So Rakeem Smith, if you're a W-2 person right now, I suggest you just go create a side hustle just for tax purposes. Find something in your life that you know how to do on the side and capitalize on it. You know, if you know how to cut hair, start a barber business. If you do have, if any of you guys that are women that you like to do hair on the side, start a hair business on the side so you can take advantage of the tax code so you can get that extra 20%. I mean, you name it. You just got to look in your life and figure out what is there something that you know how to do and you can deem it as a business, because you don't want to, because say an event that you get audited or something like that, and you know you got this business but it's not a bona fide business. So you don't just want to create any business, but you want to create a business that could be deemed as a business. So, you know, if like with me, I have this truck, but at the same time, I have my real estate. I have 404 Trucker, my YouTube channel. You know, like if you like to fix on cars, or you like to sell stuff on eBay, or you like to shop, you can start a professional shopping business. Okay. When I say a professional shopping business, what I mean is you can get into affiliate marketing. Affiliate marketing is when, for example, if you was to, when you buy products, you use them and you give your opinion on those products. That's what's affiliate marketing. So you give your opinion on the product, you make a YouTube video, or you have a blog, a website, you're giving your reviews on the product, and you contact those companies to become affiliate, and you get a commission for helping those companies sell those products. For example, my Milwaukee impact wrench video, that is affiliate marketing. That's part of my 404 Trucker affiliate program. So I'm affiliate with Amazon. So if you click on that Amazon link, it'll take you to Amazon. And if you buy it, I get a couple dollars for helping Amazon or Milwaukee sell that drill. So that's a professional shopper. But you don't want to call it professional shopping. So in your business, in your business in your business plan, you don't want to call it professional shopper. You can just call it marketing. You know, in your business plan, in your operating agreement, you don't want to just say, hey, I'm a professional shopper. No, you in the marketing business. I'm a marketing professional. So you buy products, you give your opinion, and you get a commission for helping those companies sell. So that's a business, that's a side hustle, because we all are people. We all consumers. We all buy stuff, right? We buy cell phones, we buy cars, we buy a whole lot of stuff, but we don't think about how to capitalize on that. You just gotta sit back and think about, what can I capitalize, because that could be a legitimate business. It's not illegal to do that. But you don't just want to create any business and then, you know, and you get audited and then it's not a bona fide business. And like, the tax, the IRS is like, well, give me your receipts. You got any receipts? Where's your operating agreement? You're not in business. You don't have a legitimate business. You know what I mean? So that's what I'm saying. Rakeem Smith says, I have a S corporation for my trucking business. Well, yeah, but you know, I'm talking to W-2 people who want to take advantage of that 20% deduction. Rakeem Smith, I'm sure I made close to 200K this year already in gross. If I make over a certain amount of money, I'm exempt from the 20%. Yeah, I think it's you ain't past the threshold yet. I think it's like 350,000 or something like that. You're not past the threshold just yet. What they're talking about, the threshold that you're talking about, is you get to take the 20% deductions after your expenses on the profit. Now, if you profit $200,000, I think it's 350,000. If you profit 350,000, you can't take advantage of that's what they're talking about. They're not talking about your gross. You gotta read the reform. You gotta read the tax code. That's not what it's saying. What they're saying, you get to take 20% on your profit. So after your expenses, all your deductions, and you profit, more than likely, if a truck driver grosses 200K, more than likely you're gonna have about a profit about 100K. You're gonna have about $100,000 in profit. However, as a driver, your business is gonna take its deductions, and then as a driver, you get to take some more deductions. So say you profit $100,000 as an owner operator with his own truck and trailer. You profit $100,000. Now you got to take your per diem. Okay, you got to take your per diem. You got to take all your personal miscellaneous deductions. I mean, per diem for a truck driver is about $20,000 deduction. Okay, so that's $100,000. That's gonna get you down to 80. So, and then you come in, and then you factor in that 20%. That's gonna bring you down to about 60. That's about $18,000 deduction. That bring you down to 60. Okay, so maybe 62. So you probably gonna profit. I don't know all your business, but I mean, I've been doing my own taxes. I can pretty much guess what your tax business gonna look like, what your Schedule C gonna look like. So, well, not your Schedule C, because you got an S corp. So I can almost guess what your K1s and your 1065s and stuff like that looks like. So I can probably say that you probably want to take a reasonable salary. You probably want to take about a $40,000 salary and then take the 60,000 as a dividend or a dividend, so you don't pay the whole 15%. So you don't pay the taxes on the whole 100,000. But I'm talking from a sole proprietor, a single member LLC. That's what I'm talking about. So the point is just, if you're a W-2 guy, go ahead and get start a business. Start a business. How is the app way working out? It works great, man. Shoot, I don't have to worry about going to no scale. It's great. Yeah, man. Rakim, yeah, man. That's why I make these videos, because I know some of y'all don't know. So I have to take care of my drivers. I have to help y'all. You know what I mean? So if you subscribe to my channel, I'm gonna help y'all. So that's just what it is. Chief of the trucker, Rakim, just got approval out of insurance. $1,600 down, $1,000, $10,000 a year. I think that's a year. Yeah, man, that's good. It's time to get out here and get this money, man. Rakim Smith say, I have a payroll system set up with ADP. My tax attorney told me the minimum I should take is $26,000. Okay, take a reasonable salary of $26,000, and if you grossing over $200,000, you probably gonna have a profit of about $100,000 in profit. So if you take a reasonable salary of $26,000 and take maybe $75,000 in dividends or bonuses, that's basically what it is. What I would do with that, I would create a holding company. I would create a holding company that manages. I would create a holding company that manages your S corp, so that way cash stays in the business and you don't have to get taxed. So you don't have to get taxed on all that money. But that, you getting too technical doing all that, but you sound like you got an attorney on your side, so I would do what he say. But anyway, 37 minutes in this video. So like I was saying, the tax reform bill is not really affecting owner operators who got their own trailers that at all. It's not really changing our situation at all, because we're subject to hours of service regulations. We meet the overnight rule. We meet we have a lot of deductions. We pay money for fuel. We spend a lot of money out here. So the tax reform bill don't really bother us at all. It really don't provide proof that travel business. So basically, as a truck driver, you just need to keep your logs, just back up all your logs, because in the event that you can't prove that you in a business where you're subject to hours of service, where your home, where you travel for business, then you no longer qualify. However, I've been a truck driver for 10 years, so the IRS knows I'm a truck driver. So if you look at my last 10 years of taxes, it's always been a truck driver since 2007. 2008, 2009, 2010, 2011, 12, 13, 14, 15, 16, 17, 18. Truck driver. So the odds of me getting audited, and if I do get audited, the IRS gonna know that, yeah, I'm a truck driver. I've been a truck driver all this time. So it ain't really, but if you coming from another industry, then you get into trucking, and then, you know, the IRS, it'll flag in the IRS in the IRS database that wait a minute, this person is taking all these deductions, all these losses. You know what I mean? So the state of Georgia and the IRS knows I'm a truck driver. I've been a truck driver, so my paperwork has been consistent. So they know I'm a truck driver. So I think I heard you talk about this before. I need to do more research on it. When should you go escort? 150 gross, 200 gross? It just depends. It really depends on what you're trying to do with your business and what you want to do. And from my opinion, from my research and what I've seen, if you're grossing, if your net profit after expenses is more than maybe $75,000 to $80,000 a year, you may want to consider being an S corp. You may want to consider that. However, with the new tax reform, I'm looking at the new 2018 tax reform. I'm thinking about electing for an S corp just because you get more benefits being an S corp. And being that when you take a reasonable salary, and then you do the rest as a dividend, you don't have to pay a whole bunch of taxes on that money. So you're probably looking at a good $10,000 in savings. You know what I mean? So, but the thing is, I don't want to do an S corp because it's more work. You got to do quarterly taxes. Federal guidelines require corporations their federal guidelines you got to comply with every quarter. And if you're making so much money, you got to do it monthly. And the state, if I'm living in Georgia, you got to do state, federal reporting. So you got to, every quarter, you got to do a quarterly report. Okay. And then you got to report that, pay taxes on that. So hold on, y'all. Okay. I gotta keep track of my attention here. So it's not that easy to just say, oh, S corp or LLC or a sole proprietor. So you just gotta think about it. It's like with me, I just feel better just doing a different disregarded entity and just playing as a sole proprietor, because it just makes things less complicated. I don't have to I don't have to get a payroll company, because once you don't pay the payroll company $1,500 a year, is what, it's like $100 a month for a payroll company, somewhere about $75 a month for them to process your payroll. You got to pay an attorney. Not an attorney, but you got to get a tax account. You got to get an accountant to do your quarterly reporting. And every time you make a move in a corporation, you have to do minutes. It's just a lot of federal guidelines that is just like, okay, that's why I say, if you're not making, if your net profit, because if you make $150,000 to $200,000 a year, if your net profit ain't more than maybe $80,000 a year after fuel, truck note, depreciation, gloves, all the per diem, all that garbage, if your net profit ain't more than like $80,000, and for a truck driver, it's kind of not worth it to do S corp, in my opinion. Now, when you start hiring drivers, it's gonna make sense, because now your business is making $400,000, $425,000 a year, because you got 2 trucks, or you got multiple trucks. And as an S corp, if you have an S corp, it just makes sense to be a corporation when you make that kind of money, because now you're grossing for $500,000 a year, and you're gonna want to put yourself on a salary because you got a lot of stuff moving around. So it just depends on what you're doing. Like for me right now, I feel like just doing LLC and just paying myself as a sole proprietor, because there's only 1 truck, and it just keeps the paperwork simple. So you gotta, just make your mind up on that. What I suggest you doing is finding a tax program, and do 2 scenarios. Do one as an S corp and do one as a sole proprietor, and decide on whether if it makes sense or not. From my experience, from what I've seen, it comes real close. It's like $500. It's not really that much of a difference, you know. So but when you start taking home and paying taxes on $150,000, now it makes sense, because now you want to take a $40,000 salary and take the other 90 as a dividend, and you want to keep that money, you want to keep that cash in the business. You don't want to take it out. If you got a $50,000 salary, a $40,000 salary, you're good. You can pay your light bill, your mortgage, your car note. You can go on trips because you have money to eat. Your business needs the cash. Keep that cash in the business. So really, you really don't need to be taking that cash out of the business. Let it stay in there, because you're trying to grow a business. You don't need to be taking that money out. So that's why I say you need a holding company. Because if you got $100,000 in cash and you get sued, well, you get sued personally. And then your trucking business gets sued, not the holding company. So you get the holding company that holds the cash, the assets, rental properties, mutual funds, you know, assets, you know, CDs, bonds, and all that stuff. The holding company holds your assets, and then your trucking business takes the legal liability risk out here in the public. So that, you know, you want to get Rakeem Smith. What's the other guy in here? It's another guy in here. Rakeem Smith. I suggest you look into getting a holding company, man. Holler at your attorney and ask him about getting a holding company and set that up, because, you know, Rakeem Smith said, I don't think you have to do your business taxes quarterly, but you have to do your personal taxes quarterly. Yeah, but if I don't do it, I won't be federally penalized for it. You know what I'm saying? When you're a corporation, you get a federal penalty for being late, and you assess you interest for being late. So you got to have all your ducks in a row, and more than likely, you got an attorney, you got a tax professional doing that stuff for you. And see, that's more cost. So once you look at it, you're probably gonna be paying about $2,000 to $2,500 a year just to run a corporation. I really have an LLC, so like as an LLC, I can pay all my taxes at the end of the year if I want to. So that I have that choice. I'm not federally regulated to do that. You know what I'm saying? That's, you know, but when the time comes where I got a trucking business that's making a lot of money, and I feel like I can afford to pay an attorney, and I feel like it's worth it to pay an attorney, a CPA, to manage my FICA and my quarterly reporting and all that, and I got maybe 4 or 5 trucks, because then I don't want to do all that personally. I can just outsource that. But now I can do all this stuff by myself, and me personally, I just don't feel like it's worth spending the $2,500 a year to manage a corporation. So you gotta get a payroll company, tax attorney. It's just a lot of moving parts going on. That's just my opinion. It's my opinion. Rakeem Smith said because I got a penalty for not paying my quarterly property tax last year, but now I have a payroll system that pays my quarterly. You're right, because I pay $26 a week for my payroll company. That's what I told you. It's $100 a month, and it's you know, when you're looking at starting a business, you got to do all your research, A to Z. From A to Z, all your research, so that way you know, and you got the knowledge to make a business decision. Okay, do I need an LLC? Do I need an S corp? Do I need a C corp? Do I need insurance? Do I need this insurance? Do I need this and that and that? So a lot of guys, they don't do their research and they just be like, yeah, get an S Corp, yeah, get a C Corp. But they don't understand the context on what they're doing. So you go out here and do your own research. Now you can make your own educated decision on how to run your own business. And see, to me, like I just said, I don't think it's worth it. Am I the only one who can't hear? It's suddenly muted. Y'all muted? Like, hold on. No, it's not muted. Yeah, Raheem Smith said you can have an LLC with an S Corp, but see, that's why I like an LLC, because it's flexible. I can have an LLC, a single member LLC, and have it disregarded and pay taxes as a sole proprietor. However, whenever I feel like it, I can decide I want to elect to pay tax as an S Corp, and all I gotta do is just fill out the form. And if I want to stop paying taxes as an S Corp, I can just get rid of the form. But the thing is, once you become a corporation, you're a corporation. You are a bona fide corporation, and you can't do nothing about it. You don't have that flexibility to dip in, dip out. So, Chief of the Trucker say, how much you pay yourself? Rashid, they don't tell you how much you have to pay yourself. All they tell you is it has to be a reasonable salary, or you will get audited. Yeah, I would look at the tax code. The tax code says you got to look in your industry and figure out what's the reasonable salary to do that job in that industry. So, I mean, you can put your salary wherever you want it to be, but if the average truck driver makes $40,000 a year, you want to give yourself a $40,000 a year salary. You don't want to put it at $15,000. That's a red flag for the IRS. You don't want to do that. So you might want to think about that. You want to give yourself a reasonable salary. So that's what that means. So you just, if you know your industry, so you know, you got to figure out what a reasonable salary is. Sounds wise. Thanks, Fofo. Who is your taxpayer in Georgia? I don't have no taxpayer. My taxpayer is Fofo Trucker. That's what it is. What software do you use? I use TaxAct, and I use H&R Block. H&R Block and TaxAct. TaxAct is cheaper. However, H&R Block is more intuitive. It's more user friendly. I mean, I have a opinion on all of them, but I think H&R Block is the best because they have an insurance program. So in the event that you audited, you can go to a H&R branch to get help. So that I recommend H&R Block. TurboTax is way more expensive, and they got all this extra stuff they trying to charge you for, and I don't like TurboTax. Me personally, some people may like it, but me personally, I'm a do-it-yourselfer kind of person. So I don't need nobody like trying to sell me extra stuff. I just want the program so I can do it. And I like H&R Block. H&R Block is simple, and you can pick and choose. They got that 100% guarantee. And in the event you audited or something wrong with your taxes or something like that, you can go to a branch and sit down with a tax person for free. It's part of the service. So that's why I like H&R Block. However, TaxAct is cheaper. TaxAct is probably the cheapest one out there. But they have a guarantee, but it's all online. So I recommend, if you've never done your taxes before, and you trying to learn how you do your own taxes, I would suggest H&R Block. H&R Block, I think, is, I don't want to say it's the best, but it's, for what you get, I think it's a good value on what you get, because you get that 100% guarantee in case you audited or something like that, something wrong with your tax papers. And if something happens, you can go to a branch and sit down with somebody for free. That's why I suggest H&R Block. What about self-employment taxes? Travona, what's going on? How does 400 a week sound? 400 a week as a truck driver. I mean, me personally, I pay myself 700 a week. So that's what I pay myself. From my business checking account, I have $700 a week sent to my personal account as a salary. So being that I have an LLC, in my operating agreement, I have that stated that being the driver of this truck, I give myself a $700 salary, and I have that noted in the operating agreement as my salary. So that, but it, see, when you have a corporation, you got to do minutes. It's just a lot of federal guidelines that you have to do. You don't have a choice whether you want to do it or not. And if you don't do it, you get penalized if you don't do it. So, but yeah, so I have and it's a way that you got to set it up. So, because you can't just set it up as like a transfer. You got to set it up to where it's a not a payroll deposit, but it's where it's kind of like I send myself a check, right? JH Services send 404 Trucker a check. You know what I mean? And it's a way that you got to set it up. Maybe I'll do a video about it. But depending on the bank you at, some banks just do it as a transfer, and you don't want to do that. You want to set it up to where when they send the money, it comes to the account and it shows that this business sent you money. Okay, so that way it'll be noted in there, and it'll have the business, like it'll have the business, JH Service, and then it'll have me as the receiver, 700 a week. That's what I pay myself. I think that's a reasonable truck driver, company driver salary, $700 to $800 a week. So, I mean, I talk to guys that own their own truck and trailer. Some guys pay themselves $1,000 a week. You know, I talked to one guy, he said he paid himself $1,500 a week, but, you know, Raheem Smith said, court, you are subject to self-employment tax, but you will have to pay yourself on payroll as employee, which taxes are taken out and you receive a W-2 from your business. So you don't think it's good to have a CPA? No, I don't want to say I think it's good. That's just where I feel comfortable, because I've been doing my own taxes since I was 18. I feel comfortable doing it. So to me, I like control, and I'm just a control freak. I like to be in control I like to see what my money is doing. So when I say I like to be in control, I like to see what my money is doing. When I look at my 1040, I like to see, I don't want nobody else doing my paperwork for me. I want to see what my money is doing. So to me, I think taxes is a personal relationship. It ain't something that I feel like I should be giving to somebody. That's how I feel. So if something goes wrong with my taxes and the IRS calls me, I get audited, or something happens, I can tell the IRS immediately, because I look at my taxes. I know what everything is doing. I know what my rental property is doing. I know what deductions are going on. I know how much money I spent on maintenance last year. I know everything down to within a couple dollars that my business is doing. When you outsourcing stuff to another company, you don't know what's going on. So if the IRS calls you and say, hey, we need you to send these papers over. Can you send us a copy of your income statement? Can you send us copies of your P&L report? I got it backed up right here. Boop, 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 boop. Done. You got it. Hey, I need you to send this and this. Now, if you got somebody that's doing your books for you, that's doing all your paperwork for you, running your escort, running your LLC for you, you got to get on the phone and you got to track them down and you don't know what's going on with your numbers. You don't know how much money your business is making. You don't know what's going on in your business. I like to be hands-on. So that's just me personally. That is a personal thing for me. So some guys, they don't care. They just want to drive the truck. Me personally, I'm not a truck driver. I'm a business person. I'm in business. The point of even getting a truck and trailer is for me to learn how to run a business and to be successful. So if I look at my tax paper, I look at my Schedule C, I look at my Schedule E. Schedule E is for real estate, passive income. So I'm looking at that stuff, and if I feel like I want to make some adjustments, and I feel like, okay, if I do this, this would add to my net worth, or I should do this because this will give me another deduction, I can do that because I know what's going on in my taxes. I know what's going on in my P&L. I know what's going on in my business. I'm hands-on with it. I see it. So that's my personal relationship. Me personally, taxes, running a business, that is a personal relationship that if you're a small business person, sole proprietor, you need to be doing your own paperwork. I think you, but not everybody wants to do that. But that's just me because I'm a control freak. Being that I'm a control freak, I like to be hands-on. I like to know what's going on. That's just my nature. I ask a lot of questions. My brain is always thinking. So that's just my nature. So naturally, I'm just always like, well, what's this? Why are you charging me for this? Well, what's this tax deduction? Oh, well, this just naturally, I just like to be hands-on. So that's just my opinion. Hey, Fofo, good to see you. Yeah, man, what's going on? Yeah, it's like a bill pay. Yeah. Yeah, it's like a bill pay. So I am a client for my business. So I send myself a check. That's what it is. Rakeem say, if you don't know about taxes, it would be smart to have one. Do you need an operator, or how do you set that up for your LLC? You're going to find a lot of information online that's going to tell you, oh, you don't need an operating agreement. But if you really running a bona fide business, it's in your best interest to have an operating agreement, because in an event something goes down, the government is not going to take your business serious if you don't have an operating agreement. An operating agreement is kind of like, it's like bylaws for a corporation. It's like if you don't have an operating agreement, your business is just, it's a dead shell. It's just a dead shell open to any legal action. And you got to have some structure. You got to have rules for the business. You got to have that operating agreement. So, how do you, I suggest whatever state you in, I suggest going on the state's Secretary of State website and learning about corporate law. Okay. And I don't know if a lot of people realize, but a lot of the states, they show you how to write an operating agreement. They show you how to write the articles. You have Article 1, 2, 3, 4, 5, 6, 7. In the state of Georgia, they have 11 articles. It's Title 14. In Title 14, that's corporate law. Well, it's corporation law. They got all this information on like corporations and stuff like that, and all that data there. They actually show you how to write an operating agreement. So it pretty much tells you what you need to put in your operating agreement. They're just basic things. But just having a basic operating agreement is better than having nothing. So whatever state you're in, you need to go to your Secretary of State site. They got all the information right there. It's all the information is right there. You really don't need to pay nobody to get an operating agreement. I know there's a lot of websites out there, LegalZoom and all that. You can get an operating agreement. Don't waste your time. You can go on to your state's website, Alabama, Texas, whatever state you're in, California. They have the corporate law right there. It talks about corporate law, what needs to be in the operating agreement, what needs to be in the bylaws is all there. So you need to holler at your state. Holler at your state. If you got an LLC. Now, if you got an S corp, now you go to your state and the Fed, because the state has state law on corporations, and then the Fed has got federal law on corporations. So you got the IRS, you got different laws that applies for corporations. So what for a foreign corporation, the duties of what a foreign corporation does, the definition of a foreign corporation, getting sued, all kinds of things that you gotta have that in your operating agreement. What if you die? Okay, what if the owner of the company dies? The president. Who's the president? Who's the owner of the company? How's the taxes supposed to be paid? What's the purpose of the company? You gotta have an operating agreement. You gotta have it. So your boy Rich said, so you need an S corp to not be subject to self-employment tax. You know what? This video is supposed to be about 2018 taxes. I got way off subject. I'm probably gonna have to make another video. Is there another way around it? Rakeem said you don't necessarily have to have an S corp, but you have to have an S corp business structure. Yeah, pretty much. Rashid said I was speaking of H&R Block over a CPA. I would rather use a CPA because I could do what they do at H&R Block myself. I use a CPA because he does more than just input numbers. I mean, we truck drivers, if you can find a good CPA for a reasonable price, and he knows trucking like the back of his hand, and you comfortable with him, hey, get your CPA. But I'm just telling you what I'm comfortable with doing, because I've been doing my own taxes since my first job, since I was 18. That's what I feel like comfortable doing. I don't feel comfortable giving my paperwork to another guy. I just don't feel comfortable doing that. That's just the control freak in me. I just don't fit. I mean, one of these days, once the business grows so big where my hands are tied, I just got to do it. But at this point, I don't feel comfortable doing that. Rakeem say, an LLC is a flexible entity in which you can be elected to have an S corp structure. Can't Get Right Express say, I promote your channel on my channel. Businessman in the truck, not just a driver. I want to greet you as a driver. I'm new to the channel. Yeah, man, I appreciate you stopping by, man. But anyway, I'm gonna have to redo this video. I'm gonna have to redo this video. I didn't even get a chance to go over these doggone. I didn't get a chance to go over it because y'all be asking all these questions. But the new tax reform bill is hitting the company drivers hard. It pretty much took away per diem, and company truck drivers basically have to claim per diem on their paycheck. And meal allowances, tax cuts and job changes over it. I mean, the standard deduction is now $12,000. $12,000 tax. Child tax credit increase. Parents can, child tax credit. Parents can subtract the child tax credit directly from their tax bill, not just their taxable income. The new law gives them a break, as well as doubling the credit to $2,000 a child. However, the law offsets CTC and standard deduction increase to eliminate the previous $4,000 in personal taxes. So it's kind of like I was saying before, they increased the standard deduction to $12,000, but then they just shifting paperwork. You know, they're just moving numbers around. And tax bracket, they did a total. They totally revamped the tax bracket. The tax bracket structure has changed. I mean, if you're in the middle class, they ain't really changed. We still at that 20% mark. If you're in the middle class, but that's where you need to start a business. That's why I say you need to start a business, so that way you can offset that tax bracket. You need to be buying some assets. Like my rental properties, like last year, I only paid $3,000 in taxes last year. Yep, I only paid $3,000 in taxes last year. So this year, with the 20% business deduction, I'm probably gonna end up paying less. So with that 20%, I'm probably gonna pay maybe only $2,000 in taxes. Only $2,000 in doggone taxes. You know, so it's just some rough math I did in my head. It's just some rough math. So if I do the rough math in my head, 20%, that'll give me additional $1,000. My business get to keep additional $1,000. So that's a big deal, you know. Your boy Rich, how do I dodge self-employment taxes? I'm telling you, start a business. That's how you dodge taxes. You buy assets, you buy real estate, you buy mutual funds, you buy passive income, you develop businesses, create a YouTube channel, you do affiliate marketing, you create businesses that put personal expenses to business expenses so that you get to keep the money. Okay? I mean, last year I made about $80,000 last year. But I didn't pay taxes on the $80,000. I had all these deductions. I had a whole bunch of deductions. So once you do all these deductions, now they pay $3,000 in taxes. That's how you dodge self-employment. You're never gonna really dodge self-employment, but you gotta use the tax code. You gotta use the tax code. Get the tax code and use it. It's a tool and you use it. So, I mean, you know, so that's what you gotta do, you know. Rakeem said, I've been waiting for someone to talk about this tax reform. It's a lot of people have been talking about it. But for truck drivers, we ain't really, if you own your own truck and trailer, got your own authority, you leased on, and you're a truck driver, you're going to be fine. The tax reform bill don't really change anything for you. However, if you're a W-2 truck driver, you can't take any deductions, really. You know, when I was a W-2 driver, I used to deduct a whole lot of stuff I shouldn't have been deducting on the Schedule A. If you do your taxes, you got all these different schedules, depending on what you're doing. There's a Schedule A, Schedule B, C, D, E. It goes on and on. But all those schedules are for certain activities. Schedule A is for employee reimbursement, employee expenses. Schedule B, I think that's for don't quote me if I'm wrong. I think Schedule B is for what's Schedule B? I don't know what Schedule B is. I forgot. Schedule C, self-employed. Schedule E is for passive income. You know, real estate, mutual funds, stocks, whatever. There's some more schedules. You can go on and on. So it's for the W-2 driver. The only thing you can deduct, well, you can't necessarily deduct it, but you still get the per diem, but you get it in your paycheck. So pretty much, if you're a W-2 driver, the company pretty much got to pay for your stuff. So they got to pay for your gloves, your vests, your boots. They got to pay for the satellite radio in the truck and the cell phone bill. You can't write off the cell phone bill no more. However, like I said before, they increased the standard deduction to $12,000. So it's kind of like a wash, kind of, because as a W-2 truck driver, my deductions was like $25,000 because I got my house. I had to write off my house. You know, it's just a lot of things as a W-2 truck driver. If you own your home, you get the deduct. So you get the deduct the per diem and all of that. So if a W-2 driver used to be able to get $20,000 deductions, you short $8,000 in deductions. So that's $8,000 you gotta pay taxes on that. So let me do you calculate it. $8,000 times 2. That's gonna be $1,600 less you're gonna be getting back from the government if you're a W-2 driver. I'm not talking about other types of industries. I know trucking, so that's what we're talking about. And like I said, you got to start a side hustle. You know, do a sole proprietor or LLC, so that way you can get that $1,600 back. Now you can put your cell phone on the Schedule C. Now you can claim your gloves and you can claim all that stuff because you put it on the Schedule C because you got a business now. Now you can get that $1,600 back, then some. You know what I mean? So it's just you got to use the tax code. So I'm telling y'all, I use the tax code. 30, 12. I joined the chat saying, "What up, driver?" But I see y'all more than a driver. Form 2553, yo, yeah, y'all having a conversation on y'all own over here. Y'all having a little conversation of y'all own. But yeah, so depending on what industry you're in, I mean, the tax code could help you, or it could benefit you, or it may hurt you. It depends. Yeah, Kevin Rutherford has got he's got a whole bunch of information on his website. I've been following Kevin Rutherford since I've been in trucking. So Kevin Rutherford is one of the guys who helped me understand all this stuff, pretty much. It's Kevin Rutherford, my own life experience, and a bunch of other things, but Kevin Rutherford, he's up there. Matt Phillips say, "What's up? Headed to Florida from Alabama, 2400. You must have got that load. You must have got that load out of Huntsville, Alabama. I seen the load in Huntsville, Alabama, paying 2400. I don't know if it's Birmingham or Huntsville. I know I seen a load in Alabama coming, paying 2400. And like I be talking to guys, they talking about they can't make no money out here. You just gotta stretch your legs a little bit, you know. Form 8832, that's the S Corp election form, I think. But so yeah, man, you know, the tax reform bill is, it can make or break you depending on which industry you're in, you know. can make or break you. But I mean, like I said before, in my videos back when I was at Snyder, I've been telling y'all before, one of the best things you can do as far as trucking is start a business, you know. So I mean, it's like, okay, even if you're not in trucking, say you a regular 8 to 5 person, you work at a job, ABC company somewhere, you got a regular 8 to 5 job, Monday through Friday. You get up in the morning, you go to work, you hang out at this company for 8-9 hours, you go home. Plain old Jane job. And you wanted to take advantage of this tax code, I suggest you create a side hustle. You can do Uber on the side. Create an LLC to become an Uber driver. Create a single member LLC. You can do Uber 2-3 times a month. You know what that's gonna do? If you become an Uber driver and do Uber rides maybe a couple times a month, now you get to write off gas, your cell phone, because you use the phone to do Uber. You get to write off your cell phone. You get to write off, what else you get to write off? You get to write off meals. You get to write off meals, because when you're doing Uber, between rides, halfway through the Uber ride in that day, you take a break, right? You go and get something to eat. You get to write off meals, okay? Yeah. I'm just saying. So, I mean, you can do Uber, you can do affiliate marketing, like you know, like if you a tech nerd and you like to buy electronics, you can become affiliate marketing for Motorola. You can become affiliate marketing for Samsung. You become affiliate marketer for Cheerios. You eat Cheerios in the morning before you go to work, right? Well, not Cheerios, but you become affiliate marketer for General Mills. General Mills make General Mills makes Cheerios. You can become affiliate marketer for you can just look around you and just find all the products and services you can do reviews on. You become affiliate marketers for those companies. Procter & Gamble. Procter & Gamble's got a lot of products. Tide, Gain, Huggies, diapers. I mean, all kind of stuff. That could be a business. That's a business. Once you create that business, get your LLC, get your operating agreement. You are a marketing consultant. You're a marketing consultant. Put that in your operating agreement. You're the owner of this company. You're the manager of this company. You provide reviews and research on different products. That's a business. Side hustle. Side hustle don't necessarily got to be a quote unquote bona fide hustling, you know, like you hustling and stuff. It could be a legitimate business where you don't even have to work that hard to really call it a business. It just be something you do on the side, a couple hours a week, side deal. Now you can take advantage of those tax deductions. You cut hair, you're a barber, you do hair for a couple friends that you do hair for, a couple friends you cut hair for on the weekend, few times a month. Okay. Now if you cut hair at your house, now you can take the deduction. Now you can write your cable bill off. You can write off some of your light bill because you're running a home-based business. Now you can write off your cell phone bill. I mean, there's a lot of things you can write off because you're using it to do business. You know, get your Instagram profile for that business. So in the event that you audited, or if you sued or something like that, Now you have proof that you actually running a business. Get a little checking account just in case, so you comply with the guidelines of running a business. You want to be legitimate. So in the event that you audit, you can show paper trail, right? I have Napa advertising on the back of the trailer, $430 a month. That is a good idea. I'm gonna look into that. $430 a month, that'll pay for the trailer, man. I'm gonna do that. I appreciate that. I'm gonna write that down. I'm gonna write that down. I gotta write that down. Put some advertisers on the back of the trailer, man. Matt Phillips, hey, I'm trying to tell them. I'm trying to tell these guys. There's a lot of ways to get money. You just gotta wake up, open your eyes, and see the money out here. All this money out here, but people be so sleep, they not seeing the money. It's like it's a gold mine sitting right there in front of you. You just gotta reach out and grab it. That's all you gotta do. It's right there. The tax code, LLCs, paperwork, putting an advertisement on your trailer, all that stuff, man. Come on. So I'm just thinking some other stuff. We think of some other stuff. Affiliate marketing, a painting business, landscaping business, you can start a real estate business. You can start a real estate business. You can create an LLC and create a real estate business, and you can ride around, you know, looking at houses, right? You can ride around looking at houses, and that could be a business, you know. But anyway, it's a lot of ways, you know, to do it, and that's what it is. Let me see what y'all talking about. Your boy Rich say, how long does it take for a trade line to report to DMB? I mean, it's going to take a long time. It takes a long time. For trade lines to report to DMB, you have to spend at least $50. You got to spend at least $50 from a merchant, a commercial merchant. You got to spend at least $50, and you got to have 5 credit experiences, and it could take up to 6 months to a year for all that information to generate on your DMB. So, I mean, when it comes to business credit, I think you ought to be more focused on building your business and working in your business, the tax code and all that other stuff, than actually worrying about Duns and Bradstreet. That's just my opinion. But that's just my opinion. But you need 5 payment experiences, and you got to spend at least $50 per month at a merchant. So if you got an Office Depot Net 30 account, you got to spend at least $50 for it to report. Now it's not going, from my experience, it's not going to report that first month. Sometimes it takes 6 months for them to update the information to Duns and Bradstreet. You know what I'm saying? So it could take 6 months to a year for them to report that information. But you just got to do it, and just remember that they're gonna report it. You know. So, but yeah, this video is an hour and 30 minutes long. We sitting up talking about taxes, Donald Trump's tax reform 2018 for truck drivers, tax reform bill for truck drivers. You gotta get your own truck and trailer. That's pretty much, if you got your own truck and trailer, it don't really hurt you that much. So, but yeah, so if y'all have any questions, y'all can email me at 404trucker@gmail.com. 404trucker@gmail.com. That's my new email. I got some stuff, some ideas what I'm trying to do with the channel. And this new tax bill got me thinking. And this new tax bill, call Uline, they said first of the month. I don't get what you're saying. But yeah, so y'all got any questions, man, y'all can hit me up, all kind of information, taxes, how to get your authority, running the truck. Send me an email, 404trucker@gmail.com. 404trucker@gmail.com. So I'm about to end this video. I appreciate y'all coming by, stopping by, and I'll see y'all next time. Hold on. This Rakeem got a question here. Wolf trying to build business credit. You have to start out with vendors. The ones that gave me a chance without having business credit were Uline, Granger, HD Supply. Rakeem said Uline reports every month. No, I don't think you understand what I meant. When I say it take them up to 6 months to a year to report, I'm talking about from Duns and Bradstreet to actually reflect it on your Duns and Bradstreet business report, your business credit report. Uline very well may report monthly. All of them report monthly, but for it to show up, it could take up to 6 months. I don't want to lie to you and say, yeah, it's going to take 30 days for it to report. That's not true. That's not true. It could take up to 6 months to a year for Duns and Bradstreet to update your profile, to update your credit, your business credit profile, to show it that you've been making on-time payments. That's what I'm saying. So I think you didn't understand the context of what I was saying. But hey, I appreciate y'all watching the videos, man. I'll see y'all next time.